Good day, ladies and gentlemen. Our course is Data Management and Analytics, Set 52. So our group members are 张修宇、于锦江、崔可欣、常胜雅、赵小楠。So now let's start our review.
Today, we delve into the economic and political landscapes of two influential global entities, the United States of America and the European Union. United States of America. The US stands as the world's largest economy, with a GDP exceeding $21 trillion, making up about a quarter of global GDP. It is a developed country with a diverse economy that includes technology, manufacturing, and services. The United States is also home to major financial markets like the New York Stock Exchange and Nasdaq, playing a critical role in international finance. The US dollar, as the world's primary reserve currency, exhibits significant influence over global trade and economics. European Union. The EU is a unique political and economic partnership that includes 27 European countries. It has a combined GDP of approximately $15 trillion, making it one of the world's largest economic blocs. The euro, used by 19 of the member states, is the second most widely used currency globally. The EU's political structure combines supranational and intergovernmental decision-making, with a strong focus on economic stability and integration, which impacts its role in global markets significantly. Pre-COVID, 2018 to 2020. During this period, the US dollar showed remarkable stability, primarily due to robust economic fundamentals and consistent policy support from the Federal Reserve. The Power BI dashboard highlights minimal fluctuations in the USD/MYR exchange rate, with a slight peak in early 2020, reflecting the initial global financial uncertainties about the pandemic. Contrastingly, the euro exhibited slight volatility, attributed to various political uncertainties within the eurozone, including Brexit and differing fiscal responses from member states. Our dashboard shows a gradual increase in the EUR/MYR exchange rate, with notable fluctuations indicating the sensitivity of the euro to regional political changes. During COVID, 2020 to 2021. This phase marked a significant increase in volatility for both currencies. For the US dollar, the dashboard captures a sharp rise and subsequent fall in the exchange rate against the ringgit, peaking as the pandemic caused global economic shutdowns. The USD's role as a global reserve currency intensified its movements, reflecting investors' flight to safety during peak uncertainty. The euro faced considerable depreciation during the same period, worsened by the impact on critical economic sectors such as tourism and exports within the eurozone. The dashboard illustrates these shifts with a more pronounced volatility in the EUR/MYR exchange rate, signaling the economic difficulties faced by the eurozone in managing the pandemic's impacts effectively. Post-COVID, 2021 to 2023. As the world began to recover, so did the currencies, but at different paces. The US dollar's recovery is depicted on our dashboard by a gradual normalization of the exchange rate, supported by strong fiscal stimuli and a strategic monetary policy response aimed at stabilizing and stimulating the US economy. The euro's recovery, while slower, shows signs of stabilization, driven by collective fiscal support measures across the EU and strategic monetary interventions by the European Central Bank. The dashboard shows a gradual decrease in volatility and an improving trajectory for the EUR/MYR exchange rate, reflecting a slow but steady recovery in the eurozone's economic conditions. There are three main key reasons for recommending the US dollar. Greater stability. Throughout the analyzed periods, the US dollar demonstrated significant stability compared to the euro. Even during the volatile phases of the COVID-19 pandemic, the USD remained a preferred, safe haven for investors, which underscores its reliability during economic uncertainties. Robust fiscal measures. The United States implemented strong fiscal policies in response to economic disruptions caused by the pandemic. These measures, including substantial stimulus packages and strategic monetary interventions by the Federal Reserve, not only helped stabilize the economy but also reassured investors about the resilience of the USD. Economic recovery indicators. The US has shown robust economic recovery indicators as global conditions begin to stabilize. The effectiveness of the government's intervention strategies has been evident in the rapid recovery of key economic sectors, making the USD a promising option for investors seeking stable and reliable returns. In conclusion, our analysis has demonstrated the stability of the US dollar and the volatility of the euro in different economic conditions. The US dollar has proven resilient, supported by strong fiscal policies, making it a recommended choice for investment. On the other hand, the euro showed variability affected by regional economic policies. We recommend investing in the US dollar for its stability and growth prospects. Thank you for your attention. We welcome any questions or further discussions on our findings.
This is a Gantt chart of our assignment's progress. We followed all the dates above to complete all of our assignments. The second graph shows our assignment distribution. We distribute our assignments in a balanced way, hoping to evenly distribute the points we earned.